There's one big reason why people invest in real estate, and it's not to make money. There are three big reasons why real estate is not the best investment. Performance is often the only thing that people look at when they're investing in something. So if you're going to look at real estate or anything else, let's say stocks or funds, ETFs, you're going to look at the long-term performance. So history tells us that stocks are heavily favored in terms of performance over real estate. So the Gallup poll shows us that long-term investment can mean different things to different people. And so do the words real estate. So if you invest in real estate through a real estate investment trust, which you could do, through the stock market, you buy a REIT or a real estate investment trust or an ETF that owns real estate assets. That's sort of a derivative way of owning real estate versus, physically buying properties, residential houses or commercial property, whatever it may be. For many Americans investing in real estate, though, that's what they think of. They think of owning a primary residence, buying an actual house, getting a mortgage, building equity. It goes up in value, you sell it later, and you make money. But if we look at a long-term investment as something like owning an asset that will help you build the most wealth over time, stocks have performed much, much better over the last several decades. From the beginning of 1990 through 2024, Case-Shiller Index, which is an index that measures real estate values across the United States, shows that real estate's gone up 308% in that 14-year time period. 308%. That's fantastic. But the stock market, the very broad stock market, the S&P 500, has gone up 1,325%. So it's not even close. Now here you can see the S&P 500 has outperformed growth in home prices over 30 years. So this goes back to 1990. Look at that blue line. Okay. The blue line's the S&P, the green line is the housing market. Now, which one would you want to put your money in? It's just, they're not even close. You're talking about a 3x return compared to a 3x return in the stock market compared to houses. So stocks have more of a reputation of real estate of declining sharply in short term. When there's a short-term event, the stock market will go down. It'll make headlines. People will see it. They don't really think too much about the housing market as ever really going down unless there's some major event. But history shows us that starting in the 1920s, there are almost no rolling 10-year periods where equities have lost money. So just in terms of performance, where would you want to put your money? The barrier to entry to owning a piece of real estate versus owning a stock or a fund. The barrier to entry to owning real estate is significant. You often need a down payment, 10 to 15% maybe, on a house. Okay, the average is $63,000. You sign a mortgage, you agree to take on debt, you got to pay back that mortgage over time at a fixed rate. Okay. You own the house. That's great. The stock market, you open a brokerage account, you deposit some money, and you can immediately buy a stock or a fund and start making a return right away. They're so completely different. Just the idea of the barrier to entry of owning a piece of real estate is, number one, you're going to go into debt. Unless you're paying cash, you immediately have to go into debt to acquire the asset. So getting a mortgage, maybe that doesn't sound that difficult, but you got to jump through all those hoops, submit all that paperwork. And if you need a considerable down payment, you're going to have to save that money somehow. Now, I just read you that the average was $63,000. There's not a whole lot of people out there who can just save $63,000. It's no big deal. let's say you save that much. You have a down payment. You qualify for a mortgage. Okay, now you got to go around and look at different houses. You got to submit offers on houses. Hopefully one of them gets approved. One of them gets approved. Seller says, okay, I'm going to sign this contract. I'm going to sell you my house. Great. Now you own the asset. To maintain ownership of that asset, you're going to need to pay your principal, your interest on the loan, real estate taxes, and insurance. Now, back in the day, you used to be able to pay your taxes and insurance on your own. Nowadays, lenders don't trust people to do that. So they incorporate that into your down payment, and they maintain your money for your taxes and insurance in a separate escrow account. So you're going to pay this one big lump sum at the end of the month. As long as you pay that lump sum, the asset is yours. Great. But compare that to buying an ETF or a stock. I open a brokerage account, which is the same as opening a bank account. It takes me all of 60 seconds. I can immediately, by electronic deposit, put $1 into my brokerage account, and I can invest in any stock, ETF, whatever I want to invest in with $1 right now, today, and immediately start making a return. Now, if you're thinking, okay, well, stocks are a lot higher than $1, an ETF is higher than $1. That's true, but nowadays, brokerages allow you to buy fractional shares. So if I want to buy a share of Chipotle trading at $1,000 or whatever it is, I can invest $1. I don't need to buy the full share. I can just keep investing over time, and it'll add up to, a share and a half, 2, 3, 4, etc. So you can start investing in the stock market. There is no barrier to entry. Now, on top of that, I can buy the asset, the stock, the ETF, with no fee. I can hold it with no fee. I can sell it with no fee. Whereas in real estate, I can't really buy or sell part of a house. In the stock market, I can buy or sell part of anything I own. And I know the value at all times. I can log into my account and I could see the value of my portfolio as much as I want. I could sell a little bit if I need money, and I could buy a little bit more if I want to invest more. I can't do that with real estate. So performance in the stock market is about 3 times that of real estate. The barrier to entry in the stock market is pretty much zero compared to real estate, which is all the hoops you have to go through and the huge amount of cash you need to acquire a house, and the fact that you're going to go into debt to acquire that house. And number 3, the liquidity and the costs. In the stock market, it's completely liquid and there are no costs. Real estate is not liquid, and there are huge costs. You got to pay that big chunk, that big monthly payment year in and year out. Even if you paid off your mortgage, you're still going to have to pay real estate taxes, and you're probably going to carry insurance on the house just to hold it. But in the stock market, I don't need to do any of that. In fact, to make it even sweeter, I could invest in something that actually pays me cash every month or every quarter in the form of a dividend. Can't do that in real estate. So there are so many benefits to the stock market over real estate. In the very beginning, we asked the question, why would anyone want to put their money in real estate? And I already answered it, because it's typically the only investment people know. You're going to grow up knowing about real estate. You're not going to grow up knowing about the stock market. At some point, you have to go online or go to a bookstore, if they still exist, and teach yourself, educate yourself, learn about the market. Now, that's what I did a long time ago, and thank God I did. I'm financially independent. I'm financially free right now. If I stayed in real estate, I don't know if I would be, because that's a tough market to actually acquire assets and make money in. Even if I bought a house and I held it and I owned it, it goes up in value. That's great, but I can't get that money unless I do some kind of cash out refi, which is going to cost me a lot of money to do and has other risks. The interest rate's going to change, et cetera, et cetera. How hard is it to acquire houses? It's just so difficult to acquire homes over time. You're going to have a huge amount of cash coming in to just keep buying and buying and buying. Whereas in the stock market, I could buy something, it goes out in value. I could take out my profit and then reinvest that into something else. Or I could put it into a dividend paying security where I get paid cash every month or every quarter. And I can use that cash to start a new position, buy another stock, buy another fund, or pay my Visa bill. So there are so many considerable benefits of the stock market over real estate. If you want to invest your money, make sure you're putting it in the investment that's going to give you the greatest return. That's what you want to be looking at. So let me know your thoughts. Add a comment below. Like and subscribe, and I'll see you guys next time.